Chapter number 17, I say study material questions. Test your understanding. Question number 1. CAY is employed with a leading private sector BDFP bank posted in Noida branch. One of the existing borrowers has approached a branch with a proposal to sanction fresh term loan of 5 crores with commensurate increase in working capital credit facilities relating to expansion of its garment manufacturing unit. While performing due diligence, he notices that company was formed just 2 years ago and had availed term loan of 10 crores and cash credit facility of 5 crores respectively. Its sales have increased from 25 crores in the first year to 45 crores in the year just ended. It is generating cash profits and is timely servicing its debts. The borrower was earlier catering to domestic market. However, now it is in the process of procuring export orders and working assiduously in this regard. The expansion plans are in line with development in areas of marketing relating to exports. However, there are a large number of units catering to domestic and export markets of garments in Noida, Delhi, and surrounding areas. There is a there is also demand slump in biggest US market. Besides, the unit is family based and relies upon marketing skills of its main promoter. There is a lack of well paid qualified staff with the borrower to deal effectively with its customers, both domestic as well as foreign. He starts jotting down and elaborating above points, identify what he is trying to do as a part of due diligence. As part of due diligence exercise, he is performing SWOT analysis of borrower. He is making analysis of strengths, weaknesses, opportunities, and threats SWOT pertaining to borrower. Features such as rise in sales, generation of cash profits, and timely service of debts represents borrower strengths, lack of well-paid qualified staff to deal effectively with its domestic and foreign customers is an area of weakness. Entering into export market presents opportunity for the borrower and presence of large number of competitors and demand slump in US market reflect threats. Next, test your understanding too. A company has installed an effluent treatment plant ETP in compliance with pollution control regulations of the state government. The authority structure in the company is fairly decentralized, and the top management of the company has given considerably leeway to different departments for meeting their manpower requirements in accordance with emerging and changing needs from time to time. Of late, the top management has grown suspicious over manpower expenditure in section maintaining and beautifying area around ETP. There is a system in the company where time cards are punched by all the employees to mark attendance. Suggest any one procedure you would perform as an investigator to bring out the facts. The attendance records of employees pertaining to that section can be analyzed with regards to in and out time. Further, surprise visit to the site can be conducted to see the actual number of workers at a point of time. It may reveal ghost workers. Discrepancies in attendance records vis-a-vis actual number of workers present could reveal dummy workers. Such a visit would also give indication of actual work done in the area and give an inkling of productivity of employees. Next, test your understanding question number 3. X Limited, engaged in manufacturing of floor coverings, has taken a product liability insurance policy PLI. Such a policy covers risks of liabilities for damages for bodily injury resulting from sale and distribution of floor coverings by vendors of X Limited's products. The policy is also subject to claim series clause. A claim series event is a series of two or more claims arising from one specific common cause which are attributable to the same fault in design or manufacture of products or to the supply of the same products showing the same defect. A claim series event is deemed to be one claim under the terms and conditions of PLI policy. The company has been asked to shell out damages of 5 crores due to supply of faulty products to one of its vendors. The vendor had sold floor coverings to a five-star hotel, which has alleged that harmful chemicals used in dyeing of floor coverings has resulted in skin ailments to some of its guests. Being in capacity of forensic professional appointed by insurance company, what special issues would you keep in mind while dealing with the claims involving PLI policy covering such matters? In claims involving product liability insurance policies, many documents are required from third parties. The third party may be unwilling to provide relevant documents to forensic professional concerning the very organizational very organization responsible for causing damages. Independence of forensic professional becomes paramount in such type of assignments because it involves engagement with parties who are not directly claiming from insurance company. Forensic professional need to resist any pressure or interference in establishing the scope of assignments or the manner in which the work is conducted and reported. The company might be willing to negotiate it to salvage its reputation. It can lead to additional complexities. Quantification of a legal liability under the policy can prove to be a challenging task, and it has to be determined in accordance with the policy terms and conditions. Careful analysis of date of loss. Careful analysis of date of loss when first claim occurred in accordance with the claim series clause and whether the same falls under the policy needs to be checked. Next, test your knowledge. Question number 1. Sri Rajan is above 80 years old and wishes to sell his proprietary business of manufacture of specialty chemicals. Sita Limited wants to buy the business and appoints you to carry out a due diligence audit to decide whether it would be worthwhile to acquire the business. What procedures you would adopt before you could render any advice to Sita Limited? Financial due diligence. At times, the financial due diligence review is interpreted as complete due diligence review since it is supposed to ascertain the financial implications of all the other due diligence reviews. This is, however, not appropriate. The term financial due diligence should be used with caution unless the scope of financial due diligence to be performed is wide enough to cover all the aspects. It should not be confused with overall due diligence review. In order to achieve its objectives, the due diligence process can include any or all of the following objectives for individual areas of verification: brief description of the history of the business, the background and standing of the promoters, accounting policies and practices followed by the organization, management information systems, details of management structure, trading results, both past and the recent past, assets and liabilities as per latest balance sheet, current status of income tax assessments, including appeals pending against tax liabilities assessed by tax authority, cash flow patterns, brief description of commercial and or other activities carried out by the organization, the projection of future profitability. If a full-fledged financial due diligence is conducted, it would include the following matters inter alia in its scope: brief history of the target company and background of its promoters, accounting policies, review of financial statements, taxation, cash flow, financial projection, management and employees, statutory compliance. Next, test your knowledge. Question number 2. An American company engaged in the business of manufacturing and distribution of industrial gases is interested in acquiring a listed Indian company having a market share of more than 65% of the industry gas business in India. It requests you to conduct a due diligence of this Indian company and submit your report. List out the contents of your due diligence review report that you will submit to your US based client. Contents of a due diligence report. The contents of a due diligence report was always vary with individual circumstances. Following headings are illustrative. Examples of headings of a due diligence report: executive summary, introduction, background of the target company, objective of due diligence, terms of reference and scope of verification, brief history of the company, shareholding pattern, objectives on the review, assessment of management structure, assessment of financial liabilities, assessment of valuation of assets, comments on properties, terms of lease, lien and encumbrances, assessment of operating results, assessment of taxation and statutory liabilities, assessment of possible liabilities on account of litigation and legal proceedings against the company, assessment of net worth, interlocking investments, and financial obligations with group or associate companies, amount receivables subject to litigation, any other likely liability which is not provided in the books of accounts, SWOT analysis, comments on future projections, status of charges, liens, mortgages, assets and properties of the company, suggestion on ways and means including affidavits, indemnities indemnities to be executed to cover unforeseen and undetected contingent liabilities, suggestions on various aspects to be taken care of before and after the proposed merger or acquisition. Next, test your knowledge question number 3. KDK Bank Limited received an application from a pharma company for takeover of their outstanding term loans secured on its assets availed from and outstanding with a nationalized bank. KDK Bank Limited requires you to make a due diligence audit in the areas of assets of a pharma company, especially with reference to valuation aspects of the assets. State what may be your areas of analysis in order to ensure that assets are not stated at overvalued amounts. Due diligence in case of overvalued assets. What are the items need to be checked? Uncollected or uncollectible receivables, obsolete, slow moving, non moving inventories or inventories valued above NRV, huge inventories of packing materials, etc., with the name of the company, underused or obsolete, plant and machinery and their spares, asset values which have been impaired during the sudden fall in market value, etc., assets carried at much more than current market value due to capitalization of expenditure or foreign exchange fluctuation or capitalization of expenditure mainly in the nature of revenue, litigated assets and property, investments, investments carried at lower rate of income or rate, investments carried at cost through realizable value is much lower, infructuous project expenditure or deferred revenue expenditure, group company balances under reconciliation, etc., intangible assets of no value. These are the items to be checked in case of overvalued assets. Next, question number 4. Due diligence is different from audit. Explain the difference between due diligence and audit. Difference between due diligence and audit. It needs to be underlined that due diligence is different from audit. Audit is an independent examination and evaluation of the financial statements on an organization with a view to express an opinion thereon, whereas due diligence refers to an examination of a potential investment to confirm all material facts of the prospective business opportunity. It involves review of financial and non-financial records as deemed relevant and material. Simply put, due diligence aims to take the care of a reasonable person should take before entering into an agreement or a transaction with another party. Due diligence aims to take the care that a reasonable person should take before entering into an agreement or a transaction with another party. Next, test your knowledge question number 5. TB Limited entered into a deal with SV Limited for buying its business of manufacturing wooden products or goods. TB Limited has appointed your firm for conducting due diligence review and they want to know the cash generating abilities of SV Limited. What points will you check in order to ensure that the manufacturing unit of SV Limited will be able to meet the cash requirements internally? in order to ensure that the manufacturing unit of SV Limited will be able to meet the cash requirements internally, one is required to verify is the company able to honor its commitments to its trade payables, to the banks, to the government, and other stakeholders. How well is the company able to convert its trade receivables and inventories? How well the company deploy its funds? Are there any funds lying idle, or is the company able to reap maximum benefits out of the available funds? What is the investment pattern of the company, and are they easily realizable? Next, test your knowledge. Question number 6. CA Sanjana is acting as a credit manager in the branch of DFC Bank Limited. A company has approached the branch for a review to sanction credit facilities worth 10 crores for meeting usual business requirements. It is a prospective new client. She checks past history of the company, background of the promoters and directors, shareholding pattern, and nature of business. Assessment of financial results of past years and future projections is also undertaken. She also carries out SWOT analysis of the company. Besides, assessment of net worth of directors is also undertaken. Status of CIBIL score and position of name of the promoters or directors in RBI defaulter list is also verified. She also makes discrete inquiries from few clients of the branch engaged in similar line of activity regarding creditworthiness of the company, its promoters and directors. Based on above, identify activity being performed by CS Anjana and discuss its nature. Would your answer be different if this activity was to be performed by a person not qualified as a chartered accountant? Can a non CA perform such activity? State reason. Name any three other areas where identified activity can be undertaken. The activity described in situation is due diligence. Due diligence is a measure of prudence activity or SGT as it as is properly to be expected from and ordinarily exercised by a reasonable and prudent person under the particular circumstance, not measured by any absolute standard, but depending upon the relative facts of the case. It involves a careful study of financial and non financial possibilities. It implies a general duty to take care in any transaction. Due diligence is a process of investigation performed by investors into the details of the potential investment, such as an examination of operations and management and the verification of material facts. It entails conducting inquiries for the purpose of timely, sufficient, and accurate disclosure of all material statements or information or documents which may influence the outcome of the transaction. Due diligence involves a careful study of financial as well as non financial possibilities for successful implementation of restructuring plans. Due diligence involves an analysis carried out before acquiring a controlling interest in a company to determine that the conditions of the business conform with what has been presented to the target business. Also, due diligence can apply to the recommendation for an investment or advising a loan or credit. Next question, question number 2. Would your answer be different if this activity was to be performed by a person not qualified as CA? Can a non CA perform such activity? State reason. There would be no difference in answer if above activity was to be performed by a person who is not a CA. The activity would remain due diligence. Due diligence can be performed by any person. It is not necessary that due diligence can only be carried out by a CA, as due diligence involves excess of prudence and general duty to take care in any transaction. It can be undertaken by any person. Next, question number 3 in part 6. Name any three other areas where identified activity can be undertaken. The areas where due diligence may be undertaken are corporate restructuring, venture capital financing, public offerings. Next, test your knowledge. Question number 7. A nationalized bank received an application from an export company seeking sanction of a term loan to expand the existing seafood processing plant. In this connection, the general manager who is in charge of advances, approaches you to conduct a thorough investigation of this limited company and submit a confidential report based on which he will decide whether to sanction this loan or not. List out the points you will cover in your investigation before submitting your report to the general manager. Investigation on behalf of a bank or a financial institution proposing to advance or loan to a company. A bank is primarily interested in knowing the purpose for which a loan is required, the sources from which it would be repaid, and the security that would be available to it if the borrower fails to pay back the loan. On these considerations, the investigating accountant, in the course of his inquiry, should attempt to collect information on the undermentioned points: the purpose for which loan is required, and the manner in which the borrower proposes to invest the amount of loan, the schedule of repayment of loan submitted by the borrower, particularly the assumptions made therein as regards amount of profits that will be earned in cash and the amount of cash that would be available for repayment of loan, to confirm that they are reasonable and valid in the circumstance of the case. Institutional lenders nowadays rely more for repayment of loans on annual profits and loss and on the values of assets mortgaged to them. The financial standing and reputation for business integrity enjoyed by directors and officers of the company. Whether the company is authorized by MOA or AOA to borrow money for the purpose for which the loan will be used. The history of growth and development of the company and its performance during the past 5 years. How the economic position of the company would be affected by economic, political, and social changes that are likely to take place during the period of loan. Whether any loan application to any other bank or financial institution was made, and if so, the reasons for rejection thereof. Next, test your knowledge question number 8. What are the important steps involved while conducting investigation on behalf of an incoming partner? Investigation on behalf of an incoming partner. Following steps are involved: ascertainment of the history of the inception and growth of the firm, study of the provisions of the partnership deed, particularly for composition of partners, their capital contribution, drawing rights, retirement benefits, job allocation, financial management, goodwill, etc. Scrutiny of the record of profitability of the firm's business over a suitable number of years, with usual adjustments that are necessary in ascertaining the true record of the business profits. Particular attention should, however, be paid to the nature of partners' remuneration, which may be excessive or inadequate in relation to the nature and profitability of the business, qualification and expertise of the partners, and such other factors as may be relevant. Examination of the assets and liabilities position to determine the tangible asset backing for the partner's investment, appraisal of the value of intangible assets like goodwill, know-how, patents, etc., impending liabilities, including contingent liabilities, and those pending for tax assessment. In case of firms rendering services, the question of tangible assets backing usually is not important, provided the firm's profit record, business coverage, and standing of the partners are of the acceptable manner. Position of orders at hand and the range and the quality of clientele should be thoroughly examined, which the firm is presently operating. Position and terms of loan finance could call for careful scrutiny to assess its usefulness and implication for the overall financial position. Reason for its absence or negative impact should be studied. It would be interesting to study the composition and quality of key personnel employed by the firm and any likelihood of their leaving the organization in the near future. Various important contractual and legal obligations should be ascertained and their nature studied. It may be the case that firm has standing agreement with the employees as regards salaries and wages, bonus, gratuity, and other incidental benefits. Full impact of such standing agreements would be gauged before a final decision is reached. Reasons for the offer of admission to a new partner should be ascertained, and it should be determined whether the same synchronizes with the retirement of a senior partner whose association may have had considerable bearing on the firm's success. Appraisal of the record of capital employed and the rate of return. It is necessary to have a comparison with alternative business avenues for investments and evaluation of possible results on a changed capital and organization structure. If envisaged along with the admission of the partner, it would be useful to have a first-hand knowledge about the specialization, if any, attained by the firm in any of its activities. Manner of computation of goodwill on admission, as also on the retirement, if any, should be ascertained. Whether any special clause exists in the deed of partnership to allow admission in future of a new partner who may be specified on concessional terms. Whether the incomplete contracts which will be transferred to the reconstituted firm will be a liability or a loss. Next, test your knowledge question number 9. Mr. Clean, who proposed to buy the proprietary business of Mr. Perfect, engages you as an investigating accountant. Specify the areas which you will cover in your investigation. Special aspects in connection with business investigation. First, studying overall picture. The overall picture need to be studied, like statement of P&L, like financial statements, background of the promoters, background of the company, etc. Next, statement of P&L account needs to be studied. Turnover, wage structure, depreciation and maintenance need to be studied. Managerial remuneration need to be studied. Exceptional and non-recurring items need to be studied. Repairs and maintenance need to be studied. Unusual years. If there is any unusual transactions and unusual years need to be studied. Next, balance sheets. Regarding balance sheets, fixed assets need to be studied. Investments need to be studied. Inventories need to be studied. Trade receivables need to be studied. Other liquid assets, idle assets need to be studied. Liabilities, taxation, capital need to be studied. Interpretation of figures, fixed assets details need to be studied. Turnover trend, marketability, political and economic considerations, competition need to be studied. Working capital details need to be studied. Estimating future maintainable profits need to be studied. These are the things that need to be studied in case of investigating the overall business. Next, investigation on behalf of an individual or a firm proposing to buy a business. In case of proprietorship concerns or partnerships, a reason for sale of the business and the effect on turnover and profits that there would be on retirement of the present proprietors or partners. Next, length of lease under which the premises are held, the prospects of its renewal or extension, the unexpired period of any patents owned by the vendor, the age of the present managerial staff, and prospects of continuing in service under the new proprietorship, and the possible liability not already provided for that would rise as regards payments of pension or gratuities in case of old and aged employees or retrenchment employees. If the bulk of sales are made to customers whose number is small, the profitability of the business would be greatly shaken on withdrawing their support. This would be an element of weakness which should be investigated as it might affect future profitability. The valuation that could be placed on goodwill to determine whether that appearing in book is less or more, if none is included, to determine the amount that should be included, if at all. If business belongs to a limited company, the vendor's interest in this case will be purchased by the acquisition of shares. On that account, the following additional matters would also require consideration: the authorized in issued capital of the company, whether there is any uncalled liability on the shares, if the capital is divided into different class of shares, the rights that are attached to each class, particulars of dividend paid in the past and the amounts thereof, which are in arrears on cumulative preference shares. If there are any mortgages or charge created on the assets appearing in the company's books, a search should be made in the register of charges in the office of the registrar of companies. The price at which the shares are being offered. If the company is a public company, the price will usually be in excess of a market price quoted on stock exchange. But in case of unquoted shares, particularly where the company whose shares are being acquired is a private company, the valuation will have to be placed on the shares for the purpose of purchase. Investigation in connection with review of profit or financial forecast. There are many investigations which involve an examination of future profits, like profit reports can be required as part of a general investigation into the purchase of the business or by banks and financial institutions with regard to project cash flows and profitability statements for appraisal of loan applications submitted by the intended borrowers. Next, test your knowledge question number 10. In a company, it is suspected that there has been embezzlement in cash receipts. As an investigator, what are the areas that you would verify? Some of the situations in which money may be embezzled and the various forms that such frauds usually takes place along with their investigation procedure includes the following: in cash receipts and in inflating cash payments and frauds through supplier ledgers and customer ledgers and inventory frauds. In the cash in the cash receipts, in cases like holding holding back cash sales, collections by traveling salesmen, VPP receipts or casual receipts. Example: sale of scrap, recoveries out of debt written off earlier, etc. The amount or amounts of receipts embezzled may be subsequently covered up by the perpetrator adopting one or other of the undermentioned devices. We will read any four: showing a large cash discount than actually allowed, adjusting a cash sale as a credit sale and raising a debit in the account of the customer, written off of good debt as bad and irrecoverable to cover up the amount collected which has been misappropriated, undercashing the receipt side of the cash book or overcasting the payment side. These cash receipts need to be verified regularly. Next, inflating cash payments. Cash payment frauds may be in the form of making double payment of an invoice or paying a false invoice, paying personal expenses out of the business by falsifying details, withdrawing unclaimed credit balance of customers or amounts falsely credited in the accounts of the parties, falsely adjusting a refund in the account of the customer and withdrawing the credit balance, wrongly totaling of the waste sheets and misappropriating the excess amount withdrawn from the bank for payment of wages. These cash payments need to be verified regularly. Next, test your knowledge question number 11. J Limited is interested in acquiring S Limited. The valuation of S Limited is dependent on future maintainable sales. As the person interested to value S Limited, what factors would you consider in assessing the future maintainable turnover? In assessing the turnover which the business would be able to maintain in the future, the following factors should be taken into account: trend, marketability, political and economic considerations, competition. Under that first one, trend. Whether in the past sales have been increasing consistently or they have been fluctuating. A proper study of this phenomenon should be made. Marketability. Is this possible to extend the sales into new markets or that these have been fully exploited? Product-wise estimation should be made. Political and economic considerations. Are the policies pursued by the government likely to promote the extension of the market for goods to other countries? Whether the sales in the home market are likely to increase or decrease as a result of various emerging economic trends. Next, competition. What is the likely effect on the business if other manufacturers enter the same field or if products which would sell in competition are placed on the market at cheaper price? Is the demand for competing products increasing? Is the company's share in the total trade constant or has it been fluctuating? Next, test your knowledge question number 12. MF Limited engaged in manufacturing of various products in its factory is concerned with the shortage in production and there arose suspicion of inventory fraud. You are appointed by MF Limited to evaluate the options for verifying the process to reveal fraud and the corrective action to be taken. As an investigating accountant, what will be your areas of verification and the procedure to be followed for verification of defalcation of inventory? Inventory frauds. Inventory frauds are many and varied, but here we are concerned with misappropriation of goods and their concealment. Employees may simply remove goods from the premises. Theft of goods may be concealed by writing them off as damaged goods. Inventory records may be manipulated by employees who have committed theft so that book quantities tally with the actual quantities of inventories in hand. Inflating the quantities issued for production is another way of defalcating raw materials and store items. Stocks actually dispatched but not entered in sales or debtors account. Verification procedure for defalcation of inventory. It may be of trading stock, raw materials, manufacturing stores, tools, or of other similar items readily capable of conversion into cash. The loss may be the result of a theft by an employee once or repeatedly over the long period when the same have not been detected. Such thefts usually are possible through collusion among a number of persons. Therefore, for their detection, the entire system of receipts, storage, and dispatch of all goods, etc., should be reviewed to localize the weaknesses in the system. The determination of factors which have been responsible for the theft and the establishment of guilt would be difficult in the absence of a system of inventory control and existence of detailed record of the movement of the inventory or availability of sufficient data from the from which such a record can be constructed. The first step in such an investigation is to establish the different items of inventory defalcated and their quantities by checking physically the quantities in inventory held and those shown by the inventory book. Investigating accountant should ascertain the exact duty of persons handling the stock received in and issued from the store for production or sale or any other purpose. Identify the excessive control in the hands of a single person without any supervision, as it will widen the scope of investigation. Next, test your knowledge question number 13. In a public limited company, it is suspected by the management that there has been embezzlement in supplier's ledger. As an auditor of the company, you have been asked to investigate the matter. What are the major areas that you would verify in this regard? Frauds through supplier's ledger, verification of balance in supplier's ledger. The purchase general should be vouched by reference to entries in the goods inward book and the supplier's invoices to confirm that amounts credited to the account of suppliers were in respect of goods which were duly received and the supplier's account had been credited accordingly. All the suppliers should be requested to furnish the statements of their accounts to see whether or not any balance is outstanding or due so as to confirm that allowance and rebates given by them have been correctly adjusted and whether duly authorized by authorized person or officer. Examine the system of internal control in relation to purchase orders issued and identify possibilities of collusion with suppliers. Next, test your knowledge question number 14. General objective of an audit is to find out whether the financial statements show true and fair view. On the other hand, investigation implies systematic, critical, and special examination of the records of a business for a specific purpose. In view of the above, you are required to brief out the difference between audit and investigation. Difference between audit and investigation. Objective. An investigation aims at establishing a fact or a happening or at assessing a particular situation. Audit. The main objective of an audit is to verify whether the financial statements display a true and fair view of the state of affairs and the working results of an entity. Scope. The scope of investigation may be governed by statute or it may be non statutory. The scope of audit is wide, and in case of statutory audit, the scope of work is determined by the provisions of relevant law. Periodicity. Investigation. The work is not limited by a rigid time frame It may cover several years as the outcome of the same is not certain. Next, in case of audit, the audit is carried on either quarterly, half-yearly, or yearly. Nature. Investigation requires a detailed study and examination of facts and figures. Investigation is voluntary in nature. Next, in case of audit, audit involves test checking or sample technique to draw evidences for forming a judgment and expression of opinion. It is mandatory for the companies. Inherent limitations. There are no inherent limitations owing to its nature of engagement in case of investigation, whereas audit suffers from inherent limitations. Evidence. Evidence. Investigation seeks conclusive evidence, whereas audit is mainly concerned with prima facie evidence. Next, observance of accounting principles. Investigation is an analytical in nature and requires a thorough mind capable of observing, collecting, and evaluating facts, whereas audit is governed by compliance with generally accepted accounting principles, audit procedures, and disclosure requirements. Next, appointing agency, investigator. Even third party can be appointed as investigator. Audit Auditor is appointed by owner or shareholders of the company or enterprise. Reporting. In case of investigation, the outcome is reported to the person or persons on whose behalf investigation is carried out. In case of audit, outcome is reported to the owners of the business entity. Next, test your knowledge question number 15. Enumerate the steps to be undertaken in case of forensic accounting process. Steps in forensic accounting process. There are 6 steps. Step 1, initialization. Step 2, develop the plan. Step 3, obtain relevant evidence. Step 4, perform analysis. Step 5, reporting. Step 6, court proceedings. There are 6 steps involved in forensic accounting process. Next, test your knowledge question number 16. Briefly describe the key contents of a forensic accounting and investigation report. Forensic accounting and investigation report. Key contents: title, addressee, and distribution list, if any, scope and objectives of the assignment, approach and broad work procedures undertaken, an executive summary of the results covering all important aspects and the essence of the findings, reference to use of an expert where applicable, the fact that the assignment has been conducted in accordance with the FAIS or material departures therefrom, the list of findings supported by key evidences, sources of evidence, and other relevant matter, assumptions, limitations, and disclaimer of the assignment, conclusions, if any, drawn from the assessment undertaken. Test your knowledge question number 17. ABC Limited is a listed company having turnover of 50 crores and plans expansion by installation of new machines at new building having total additional project cost of 20 crores. Rupees in crores per person. 10 crores for building, 8.5 for machinery, 1.5 for working capital. Total 20 crores. Project gets implemented in 22-23, and one of the accountants report to the managing director that some suspicious transactions are noticed in the purchase of building material, but the management is confused as to whether they should get an audit or forensic accounting done for the same. Advise management about the difference in forensic accounting and forensic audit. Forensic accounting. What is meant by forensic? Forensic means suitable for use in the court of law. The word forensic comes from Latin word forensics, meaning offer before the forum. It is relating to used in or appropriate for court of laws or for public discussion or argumentation, relating to the use of science or technology in the investigation and establishment of facts or evidence in a court of law. Forensic accounting. The integration of accounting, auditing, and investigative skills yields the specialty known as forensic accounting. It is the study and interpretation of accounting evidence. It is the application of accounting methods to the tracking and collection of forensic evidence, usually for investigation and prosecution of criminal acts such as embezzlement or fraud. Forensic accounting is the application of investigative and analytical skills for the purpose of resolving financial issues in a manner that meets standards required by court of laws. Forensic accountants apply special skills in accounting, auditing, finance, quantitative methods, certain flow of areas of law, certain areas of law, research and investigative skills to collect and analyze and evaluate evidential matter and to interpret and communicate findings. Forensic account is different from other audits. In other audits, the objective is to express an opinion as to true and fair presentation. Whereas in case of forensic accounting, whether fraud has been actually taken place or not is the objective. Techniques. In other audits, we use substantive and compliance based sample based techniques. In forensic accounting, we use investigative, substantive, or in depth checking. Period. Other audits, normally for a particular accounting period, there is no such limitations in case of forensic accounting. Verification of stock, estimation, realizable value of assets, provisions, liabilities, etc. Other audits relies on the management certificate or management presentation, whereas in case of forensic accounting, independent or verification of suspected or selected items where misappropriation is suspected. Next, off balance sheet items like contracts, in case of other audits, use it to vouch the arithmetic accuracy and compliance with the procedures. In case of forensic accounting, regulatory and propriety of these transactions or contracts are examined. Adverse findings, if any, in case of other audits, negative opinion or qualified opinion is expressed with or without quantification. In case of forensic accounting, legal determination of fraud impact and identification of perpetrators depending upon the scope.